Mo- Okay, I think she's done, guys. Good morning. How is everyone this morning? Is the video and audio clear? Great, thank you, Brian. Okay, so obviously we're getting a move pre-market. We're up about 10 points on ES, so I apologize for being late. It's caused me to make a couple of last-minute adjustments, and I'm pretty sure I'll have to adjust one more time coming into the open. So um, the I can tell you already the first adjustment obviously is we're going to have it move this Globex high back to 2250. I'm going to wait a little bit and see if they push up any higher prior to the open and do the market preview. So the first thing that I noticed, obviously last night we pushed down to, let me get my drawing tools up real quick. Okay. Okay, so we pushed down to 1803 and a quarter last night, early in Asia, and we've really kind of been pushing up ever since early Asia. So the first thing to keep in mind is that actually we have a series of higher highs and higher lows, and let's just pull up an overnight chart real quick so that we can see what that looks like. Okay, no big secret here. Generally, ever since we did pull back a little bit after the London Open, but if you go back into early Asia, let's pull this up. There we go. You can see we've just been making a series overnight of higher highs and higher lows pretty consistently. So the first thing that I want to look at this morning is when we open is I want to see if we continue in that pattern of higher highs and higher lows out of the gate, or if that reverses. Now, obviously, that requires me to make a little bit of a judgment call at the open, or not trade the first half hour to see how the market is setting up. We have some data. I'm pretty sure it's non-impactful on the market at the top of the hour. Let me see what it is exactly, so I'm not just shooting blind here. It is at 9 a.m. we have business inventories, and I do not think that has a huge impact on the market one way or the other. Importantly, also, NQ is already up 21, 22 points this morning. So in addition to the higher highs and higher lows, let's pull up one more chart and pull up NQ really quick. Okay, almost mirror image chart, and obviously we've been driving pretty hard since early this morning, straight up. So the one thing that I want to see today in terms of do we have any breakdown, right? We have I would take off the 24-hour chart and just have it for a point of reference, that average. Now, obviously, that's a pretty dramatic pullback, but if we do get some selling pressure, we're obviously going to see this higher high and higher low trend line that we have here holding. Additionally, for more aggressive traders, I would also have a trend line like this. Again, I'm not trading off the trend lines, but they make it really clear to me if I, like this morning, if we look and we open 34.65 and we pull back to 34.55 and there's no dip lower than that, we catch that bottom end of the trend line, I'm not going to be trying very hard to press my shorts to the downside. It's just going to give me a point of reference. I still use the zones in my trade setups, but I'm going to go, okay, I kind of see where this channel is going from overnight. Obviously, in order to get any kind of downside push, I need to get below 34.55. And then once I get below 34.55, it's pretty easy to see that this 34.30 becomes important. It gives me 2 points of reference. Also, this stretch down from where we're trading right now would give me about a 30-point rotation, and that's about half the range that we've been having on NQ lately. I would be very surprised at this 34.45 level. That's gap fill, and it was also overnight resistance on NQ. I would expect to find responsive buyers there. How do I key off of that? Well, there's two things. First of all, ES has clearly had a rotation into it out of NQ over the last couple of weeks. NQ has led us both higher and lower. However, last time we had a series of updates, ES was actually stronger than NQ. So, um, not to cloud the waters, however, if we get back in here and I find responsive buyers on NQ, I would expect ES to also have a very strong reaction back to the upside. All right. On the other hand, if NQ gets below this level, remember the pattern has been for the last couple of weeks, particularly in the first hour and a half, has been for ES to kind of do one of these jobs here, while NQ is doing one of these jobs like this. Okay, so and that's because there's rotation out of NQ and into ES, or there's simply less aggressive sellers in ES. One of the two. I don't try to get into exactly why it's doing it, but it is doing. This pattern is prevalent over the last couple of weeks, particularly on mornings when NQ is weaker. So the two things I'm looking for, first of all, is NQ set hitting new highs while ES is hitting new highs, because NQ has been the leader. Particularly, is ES getting hooked up, hung up, while NQ is getting weaker. If NQ falls below the top of this resistance point and keeps driving lower without finding responsive buyers, my guess is ES would eventually bleed out like that and then get a break to the downside. So that's the first thing that I'm looking for today. So my first concern with any gap up is, let's go back to the charts, the open drive. I know I cover this every day, but it costs traders the most amount of money. It's cost me a tremendous amount of money through the course of my career. I cover it every day, mostly for myself, and then hopefully to the benefit of y'all as well. So what am I looking for an open drive? Well, the first stick will either be one very large stick. Usually in this market, it's been 5 to 7 points, or we have a series of 3 smaller bars, with the first bar in each case being the low of the day, right? That this is indicative of a potential open drive. It's not been, the open drives have not been the give me's that they were back in February, March, January, and the reason for that is we've been getting responsive sellers on open drives, so it's made it trickier. However, the way that I handle that is, even if I think it's going to reverse, I wait for a clear sign of reversal and a good entry versus trying to step in front of an open drive higher. We've obviously dropped significantly from the highs. I don't know how to explain this, so let me think this through what I want to say. There's room to the upside, but we don't have the same ultra aggressive buyers in ES, which gives me pause on simply buying open drives higher, right? And really the key to the open drive higher is looking for the pullback and seeing if it holds halfway back after whatever the initial drive is for a continued push back higher, as opposed to it's an automatic give me, buy the open drive higher and have it trend up all day. In addition, even if we do have an open drive higher and a move in the other direction, I would expect after the first hour, so in most down markets, this has been the pattern that we've been getting, where in the afternoon we split. I would expect the inverse of this pattern, meaning we gap and open drive higher, and then after 9:30 or 10 o'clock, I would expect a retracement, and then in the afternoon we'll determine whether we're going to retrace the whole move, have a fail drive higher, we go into balance, or we're going to continue to drive higher. One of the keys to determining whether we're going to roll over or not, or whether we're going to open and go into balance, is whether the tick on the NYSE is plus 500 or minus 500. Generally, after the first hour, right, we go into balance. Even on trend days up, we tend to go into balance initially, at least. There's very few true trend days up. So I'm going to be watching the tick to see if that occurs. In this particular case, if we go into balance, I think that we'll see a lot more dramatic push back down than we would have 2 or 3 weeks ago. And so I will be looking to position myself from a move higher. So that being said, where am I going to take my trades? I made that about as complicated as I possibly could. Okay, so right now we're at 2250. First time into this 2650, 2850 area. Assuming we don't open within a point or two, I'd like to see a 6-point rotation to the zone. I'll be taking a short here. The caveat there is it has to be a minimum of 6 points. If it's not, the only place I'll take it in this area is right against the highs with a 2-point stop. Anything less than a 6-point rotation, and you need to consider this trade aggressive. So on your trade plan, if you're going to take this trade, right, you need to make sure that you can take your second and third trades on the day, because there's higher than normal odds that this could get tagged out. That's the only caveat to that. I'll probably be taking that no matter what. It just depends on where in the zone based on the rotation, right? I will be taking a short at the zone above. You'll remember this 33 to 35 area, and I'll show you in a larger chart in just a second. This is the bottom area. These 2 points is the bottom area of the prior range. I would expect responsive sellers in here. I will take a short at that 3850 to 4050 level, And then if we can make it up here, this 42 to 44 and 49 to 51. I doubt we make it much higher than that. So I don't think we're going to have the same explosion to the upside. And I also would start to look for the NQ range to contract over what it's been the last couple of weeks, particularly on the upside. So we're already up 18. I don't expect a plus 60 day. I know there's room to the upside, but generally when we get as broken as NQ is broken, it doesn't. It tends to not go straight back up. It tends to more kind of crawl. At least historically, it has over the last decade. That's been my observation. So I wouldn't expect a move back up. Also, highly likely the entire move has already occurred overnight. We've moved from 1803 to 1822. That's a 20 point, essentially a 20 point overnight range. So I'm going to go theory wise with the ranges have been stolen overnight. So my call is after the first hour, I'm going to look for balance and probably balance with a downside bias. So at each of these zones, I am looking for responsive sellers. On the downside, okay, so I'm going to have to adjust this here in a second. So there's two areas of interest. This 1814 to 1816, first time down, particularly towards the back. If we can hold up and open at this 1822 level, that'll be a good rotation down into the 1814 level. And again, I would still consider this aggressive because it's within the closing range of Friday, but I will look for responsive buyers first time in here as a sign of strength. Okay, for a 2 point rotation higher, it's still certainly possible that we make a move for a gap fill prior to continuing up. I'm not saying that we can't have an up day, but I'm pretty sure we're going to try for half gap or gap fill. Considering the amount of weakness that we've had, there's a lot of sellers trapped above. My guess is they're going to push back down, and then we find out at gap fill exactly how strong or how weak we are. In this particular case, I'm putting actually Friday's low as the white. I'll switch that over to the white zone once we get open, because if you think through the logic of it, if we're going to reverse back up, we're opening at 1822. A push down to 1809 would cause a little bit of a panic, but if we can hold above it and push back up, I think it would panic out whoever chased up here and let us get some constructive action, trade pattern back to the upside. Again, as long as we don't do this in the first hour, in other words, if we open, there is one possibility in terms of opening where we open at 1822 and we get responsive sellers out of the gate and we essentially get an open drive lower, right? So it would actually look like this, right? So this gap becomes very important, and then this Friday's low becomes the extended range. I don't take trades at the gap necessarily, particularly this one, because it's right in the middle of this chop zone. So if we got to gap, I'd simply hope that we can get down to this 1807 to 180. It should be 1809. I'll adjust that. I apologize. The zone is 1807 to 1809 specifically, and I will probably take a long at 1809. Considering where we're opening, that would be a very good stretch. So I will definitely take a long here. I'll definitely take a long back towards maybe not 1805, but towards the middle to back of this zone at 1803 and a quarter. 1801 to 1799, important psychological area. Again, when I say, if you're new following me, when I say I'm taking a trade, all I'm looking for is at the zone is a pause and then a rotation back up. That's simply all that I'm looking for, nothing more. Now, if I get the pause in any of these zones and we hang out in the zone for 25 minutes, I will take considerable action to reduce my risk. And that considerable action will be either A, close the position completely, regardless of P&L, move stop to the most recent swing low, whatever that is, once we got into the zone. If I'm profitable, taking half my profit and then moving the stop to break even. Those are pretty much my options at the zone. There's really no location in here that I will absolutely absolutely try to stick a trade. The closest open gap, and again, I don't think we're going to get there today, is this 1786, 1788. There's also a zone at 1790 to 92. I left it off, and I left it off for a reason. Okay, so if you look, it'll be pretty easy to see that there's actually from essentially 90 and a quarter to 92 and a quarter. There's a zone here. But my figuring is this, just from trading, right? If we get below this 94, 97, which is actually considerable support, I would expect responsive buyers here. I just don't think people are going to step right in and not let them close the gap. That's my guess. I could be wrong. They could come in. So you could see responsive buyers here and a push back up. Okay. But if I were trading and I had capital put to work as a manager, I know that I just go, well, I'm just going to let them see if we can pull back to the 88, 86 area, and I'll take my trade from there, knowing how much stronger an area that is for pushback up. If we do somehow get back to this 86, 88 area, I will be putting on swing trades out of here, both in options, and I'll be leaving fairly sizable trailers for an attempted move back to this 1801 area, at least, if not higher. Okay, so I think those are the zones below that I gave. Y'all might want to throw this 1790 and a quarter to 1792 and a quarter on there. I won't even have it. I'm obviously aware that it's there, but I won't have it on there. I just simply don't want to take a trade there. It's a personal call. That's how I'm going to trade it. I think in terms of the pattern that we're looking for, right, outside of looking for strength in NQ, I think initial pushes, if we go back and look at old markets, which I'd like to do really quick here. So I was doing this last night to get a sense of what was going on. Let's go to the other, so I don't have to pollute this. And we go back to a time when we had a down market, which was, okay, so in this last pull down, this was February, but we were still pretty much in a raging bull market. You'll notice the responsive buyers came up, and when we started to go up, we did find initially on most days responsive sellers out of the gate on these gaps. You can see the first bars, a lot of them were red in here. Of course, that's right before we went on to this massive run in March, right? So if we go back to last year, okay, again, we had these gap and goes. So obviously, I'm still concerned about the gap and goes. You'll notice that even when we were first initially coming out of the downward cycle, that we did get pushbacks after the first bar up. These are 15-minute bars, but you can see it got very choppy after the initial opening bar repeatedly, right? Almost on every day, we got pretty bad chop early in the day. And it's because most of these moves were exhausted, and then we just simply got squeezes. I think we're in a different market, and we won't see the follow through that we had on these other days. I just don't think there's enough to drive us with the damage that's been done in NQ, particularly after the first hour of the day. And then if we go a little bit further back, because I want to show you the rebounds off these downside moves. Okay, again, if you'll see, like this is a move that was stolen overnight. We gapped and we went. Again, this move here, you can see that after we've had a series of down days, responsive sellers early in the day, and then the pushes back higher. Responsive sellers early in the day, after, and then even if we got that open drive higher, it went to balance afterwards. And this is what I mean by a failed open drive, where they push for extension and then they push down back lower. It really wasn't until we cleared this area, until we cleared the 1600 area, that we really started to get good runs. But I think we're going to see more, excuse me, more of this early in the day, right? More of this type of pattern, and then get responses like this back up. There's no doubt that we can push higher. I just think initially I'll be looking for signs of pushes back down, and then I'll be looking for areas to enter to get back up to the long side. So I'm not bearish, I'm not bullish. I'm looking for a two-sided trade, which is what we had in these areas, which is really good news for us. Unless we get this, it's really easy to make money. You also have to assume, if you look at this day right here, I want to highlight this. If you look at both of these days, even in here, what we had was responsive sellers on both ends, but the range was still very good. This is essentially 68, right, to 80. It was a 12-point range, and there was plenty of trades both sides. Even in here, this is 86. Well, this sucked. This is 86 to 94. It was total balance and chop. The move was stolen overnight. You can see here that we gapped. They came back and filled for half gap here and pushed. And they did that almost, that was the pattern pretty much almost every single day until we got out of this range. Most of the larger range was stolen overnight, and we were left to deal with kind of crummy markets, except for that the 2 points work beautifully in these environments. Okay, so I think I covered that pretty. I think that gives you a pretty good picture of what we're looking at. I want to show the trend lines that are important here really fast. Okay, this white trend line is coming off the top of the downside move that began this downside. Okay, so obviously that's sitting right now, right at this 1822.50. Excuse me, that's not correct. We're sitting right now at 1820, so we're gapping just above the upside of this, which doesn't make it easy, right? These work better when there's large extensions into them. So I would not be surprised again to see us come in. We could either follow this back to the downside till we get half gap and then push, or we could just simply fail down and, wow, didn't mean to do that. Fail down again into either half gap, which I think we'll probably find responsive buyers the first time in here, or into gap fill. The important thing will be if we fall back below this trend line is to see us get back above, hopefully do a backside test, and then push back towards Friday's high. And if we get to Friday's high, that opens the door up to the 32, 34 and higher area. Again, I'm not necessarily expecting it. I think a 20-point stretch on the upside, given the damage, would be a lot, but anything can happen. I'm just trying to go through the scenarios in my mind. This trend line here is extended from the swing high on the late day of Thursday onto Friday's swing high. So obviously, again, off of the open, these are about in the same area. If we can push above this, it would not be at all surprising. In other words, if we can hold this gap area and then come in for a backside test either here or here, it wouldn't surprise me to see a push back up off of those. Hopefully they give us a test into this zone if we are truly going to have an up day. But I want to be clear, I'm not chasing, I'm not necessarily fading the open, but I'm not chasing the open. I want to see a good rotation down and see if I can't get a shot onto the long side for the day. I don't think we'll fall straight out of bed either. We've been down pretty good. We'll obviously know after the first 15 minutes if we don't have an open drive lower. What I would expect would be a push up, and from Friday's highs, I would expect responsive sellers here. If this happens, as long as this happens near the end of the first hour, right? If we get up here in the first half hour, we could easily push back up into this 33, 35 area. And like I said, I will be taking responsive, I will be selling here, and I will be looking to leave trailers for a push back down into Globex high later in the morning. So that's my trade plan for this morning. Wanted to go over some trend lines in NQ really fast, but before I do that, I want to make a quick adjustment here, and I need to send this out to my clients. And then I want to look at a couple of trades from Friday and just kind of go over a few pointers on how some of the things in the markets have changed in terms of leadership and weakness and what I'm keeping my eye on. Again, NQ is going to be my canary in the coal mine. If after we open, right, obviously I know that we'll be up 23, right? I'd be looking for a push towards that plus 30, and I'm going to watch very carefully to see if there's responsive sellers there or if they start pushing down. Also, in particular, if we get there and we reject quickly on NQ, we get one of these jobs, and then we start setting a series of lower highs and higher lows on a 5-minute, that would be an indication that we're probably going to push back down. And my guess is, because NQ's been beat up so badly, that there's going to be some people relieved simply that they're getting out plus 23, especially for the Cowboys that bought on the close on Friday. So let me save this real quick. Let me make an adjustment. So adjust this zone right now to 2250 to 2050. And I'm leaving everything else just as it is. I'm not going to adjust any of the other zones. If we push above here, I'll be forced, but hopefully if we push above 2250, we just go ahead and get into 2650 out of the gate, and then we don't have to worry about it. In which case I would look for, by the way, if we do open at 2250 and we get a push down, it would not surprise me to see responsive buyers out of this 2050 to 2250 area. I'd push closer to the 2050 than I would the 2250, but it wouldn't surprise me to see responsive buyers first time in for an attempted push back out. Also, the bottom of the range is begging to be tested. I'm going to show you all a bigger picture of that in a second. But let me save this real quick. And then let me get this out to my clients real fast, and then I will. Okay, guys, if there's anyone I missed, just go ahead and hit me on Skype, and I'll send that out. But I think I've got everybody. So the first thing I want to do, by the way, in terms of looking for the traps, I just want to show you all, to make it easier on you with the traps, you take this. Okay. Let's go through here, remove drawing objects. Trend lines, get rid of those first. Okay, so we know Globex high is 1822.50, so get rid of everything. I have a separate chart, and all it has is this, and then get rid of all the zones above as well. There is no open gap that I can see. I need to double check that really fast to make sure I'm correct on that. Okay, and then the only other area that I'd want marked off here is this 1833, 1835. And the reason for that is because it's the bottom of the previous range. I want to go over to the volume profile real quick and take a look at that since I have the time to do it. And I'm going to cover both NQ and ES here really fast. Again, I'm not a volume profile expert. It's just where I start my charts from, but it is not a I'm not an expert on it. It's not the sole basis. I don't think volume profile or anything else works just by itself. So the first thing I notice, obviously, we have a clear downtrend off of this. So off the daily, right, just from here to here, obviously you'll need to break above this in order to get any upside. And clearly there's a channel here that is pretty easy to see. So the channel goes pretty much like that. That's the down channel. So right now, if we look at the top of the channel, it's sitting up here around 1840 area, and the bottom side of that channel obviously is pushing down further and further to 1800. And just like we came up in this channel like this, it's certainly possible that we come up to this side, then we come back up and bang down to this side. It's not uncommon to break out of the top of a channel, sit up here, then fall back in, and then come all the way back down. This may not happen till tomorrow or Wednesday. We may not even get up here, quite frankly, but I think we at 1822, that would give us our test just to put this in place in terms of the channel, right? That would put us right up to this 1838, 1840, or 1842.50 to 1844.50, which, and while these are stacked, these two zones are stacked on top of each other, I'm willing to look for entries at both these points, because the only reason I'm looking at the volume profiles, it makes it very easy to see this. Okay, you can see in our prior range, this is the bottom of the channel, and this was the low. This was actually the low close of that channel. It was right here at 1832, right before we traveled back up to the top. And so we found responsive buyers when we would come down everywhere from there up to 1842-ish, essentially. So this whole thing, this whole area, okay, I would expect responsive buyers first time in, responsive sellers first time in here. And I'm pretty certain, I can't say with 100% certainty, but my guess is that this is going to end up being the top of our range for a little while. I could be wrong. We could just be right back into total bull mode, in which case push down. Where would pushes down give us responsive buyers? Well, let's go look. Let me compact this more so I can see it. Well, the 1800 to 1796 area is pretty obvious there. So that's so this is that 1788 area. There's an open gap sitting right here, and so you can see the last couple of times when we got up there that this area had served as resistance prior. We broke out. It was a fail break. We fell back into the range, right? And then when we broke out from this area, backside tested and went. So this entire essentially 13-point area is very critical. What that means is usually when we get into areas like this is that the trade action will become very quick and you have to make fast decisions, right? But it's unlikely to slip through this area without a responsive buy the first time in. And so that's obviously key. So this is the best, again, that I can guess, but I'm just trying to come up with scenarios in my head so I can create an area of operation. It would make sense that we come up, we trade to the top of this area, and then we push down to the bottom, and then we get a question mark from there as to whether we push lower or we balance. Markets tend not to go straight down or straight up. You'll notice, look at all the choppiness that we got in here. This isn't that long ago, right? This is that February time period, right? So the markets tend not to go in a straight line, even if it looks like they do emotionally, they don't. So I wouldn't get overly involved. Again, to give us a picture of what a breakdown might look like as well, let's go look at NQ really quick. How am I doing on time? Okay. Oh, one more point I wanted to make here. Let me do something really fast. Get rid of all this stuff. Okay, just on a regular Fib retrace, swing high, down to swing low. Okay, so the 50% retrace from swing high to swing low is just past the bottom of this range. It actually puts us in this 1849, it looks like, to 1859 area. Is that right? Yeah, 1849 to 1859. So it is possible, you need to keep on your radar, that we could push up into the middle of the zone. I just think the first time into this area, we're going to have a hard time getting above this. If my theory is that we're in a weaker market, that will hold true. If not, we'll come back up. But my guess is we're going to have a further extension down. And when we get the retrace, it'll be when this 50 retrace actually lines up with this zone, will be when we actually get to push up into here. It would actually make more strength sense, right? Even if we were going to push back up to the top, you get a retrace, they push back up in here, then they reject out, then they come back up the second time, and that would give us access somewhere down the road to coming back and retesting the highs. It doesn't have to work that way, it does quite often. Let's look at NQ really fast. And again, the executive portion of the summary is over. Let's get rid of this really quick. Okay. So the first thing that I see when we're down here is that we are at the very bottom, or we've come very close to the bottom of the prior trading range before the current one that we ran. In other words, that was pretty much, this is failed breakout. This is the bottom of the old range right in here, right? And we came right to the bottom, which I imagine this eventually, this 3,400, at least the first time, is going to act as support. Our range should look something like this, right? Which means 3,550, we have room all the way up into the 3,500s, 3,550s. So there is still room to the upside on NQ and still having to push back down. Also, importantly, where's the 50 retrace? You always want to keep in mind where that is. And again, right now, that's sitting up here at that 3,600 area. I'd be surprised if we get there, certainly today, right? And my guess is that we'll keep pushing lower until this can line up where it comes in with the bottom of this prior range and will then eventually be the top of our current range, which is at 3,550. And that's a nice fat range, right? That gives us essentially 100 to 150 point range, which is great. You know, over weeks we can trade up and down inside of it. I don't think the market's just going to fall flat on its face and go to zero. It almost never does. So also keep in mind the trend line for this down channel is all the way up here still. So there is room to stretch its legs to the upside. I just think enough damage has been done that we're going to find responsive sellers on the way down. And if we get squeezed, it'll be because people push too hard and then we get an strong end of day push. But I'm not expecting us to go back to what we had in February, March. Just to make sure you're all clear, I would look for the reversal hours at 9:30 a.m. And that's really all that I have. I don't have any more insight into what the market's going to do today. Trading wise, a lot of us, I'm speaking to my coaching clients, guys, a lot of us, obviously, we had very big weeks last week. You don't have to push. You don't have to push your P&L today. Okay, markets can reverse. It was pretty easy to the downside last week. So give it a little bit of room. We are pushing also, so make sure you adjust Globex high. Right now it's 1823.75, which really sucks because that zone 1825 to 1827 is really the 1825 to 1827 is a resistance point. So let's see this 25 to 27. There was a zone there, and then we're pushing 2375. So I'm simply going to, how am I going to handle this? Give me just a second. And I've got 2 minutes to decide beautifully. Beautiful. Hold on 1 second here. So let's get rid of this chart for the moment. So let's see. So 2375. Damn, they're not giving me a lot of room, fudge room here. Okay, I'm gonna go with 23. Say 24. So I'm gonna go with 20. Since I have to make a call 2 minutes before the open, 24, 22. As long as that 23, as long as 24 holds as Globex high, I'm gonna go 23.75 to 21.75 as the zone. There is a zone at this, that puts the zone at 18, 20 to 18 as well, which I'm going to skip. I'm going to leave the 18 to 20 off of there. I just don't want to have zones stacked on top of each other and still stick with this 14 to 16. Because if we break this, it's more likely that we're going to go for half gap. Half gap's going to fall. Still, let's see where half gap would fall if we're going to. We open here. Okay, so this would be half gap. This would just be just past half gap. So let's just go with 23.75 as Globex high. I'm not exactly sure that was correct. And we'll look for half gap down at the 17 to 16 area. We got fill. So what I would do is, how the hell am I going to adjust this? Okay, well, I'm still given the range 14, 16. I'm going to stay with the 1416. I'm just going to end up missing it if we just half gap here and we move higher. This is half gap right now at this 18 and a quarter. I'm not going to jump in here. I'm willing to take a trade here. It's a good enough rotation down. And it gives me some backup in case we push down into gap fill. I'm actually most comfortable in this area, the backside of this area, and probably 13, 12. I'm comfortable with the backside of this area and a 3-point stop. Okay, in case we go for a complete gap fill before we get a responsive buy in there. If we come in for half gap, I'll just miss it and set up my trades later through the course of the day. So that zone's going to be 23.75 to 21.75. And obviously we have a swing high of 24.75. I really hate how they opened this market today. And so my guess is we're going to push up. I'd be highly shocked if we don't make a push for Friday's high at this point, perhaps into that news. And then test, like I said, the bottom end of that prior range is probably looking to get tested. And then also, if you throw in the trend line here as well from Friday. Okay, this downtrend line, if we come in, right, we're trading here, we come in, this is a great rotation down, and it would give us a backside test of this for a pushback higher, right? I'm not saying it will happen, but it's possible. If we extend out much longer through the course of the day and we take the first hour, you're just going to have to measure wherever half gap is from whatever swing high it comes off of. And again, I wasn't prepared to trade off the open, but I'm pretty sure someone's going to be a responsive seller in this area. We opened exactly, I think, plus 30 on NQ. So we're going to find responsive sellers for a push back down in here. If that happens, half gap and then gap. But you can also see on the flip side of that, if we fail to get to Friday's high after this strong a gap, right, that's going to really be a sign of weakness to me. When what doesn't happen when what you expect to happen doesn't happen, it's a very good intelligence. Okay, so keep in mind if they're unable to push to Friday's high, it would be a sign of weakness. So again, I would expect to push down here at some point, and then an attempted push back to Friday's high. If Friday's high doesn't come first, on the other hand, if we trade it to Friday's high and then we reject out and we get back down here, I'm not as I'll still take a trade here, but I would not necessarily be looking for us to move back up. I really think the most logical scenario here with a 10-point gap is that the overnight range has been stolen and we end up with this today, right? And then in balance, remember what happens when we're in balance, which was basically what we had Friday, right? When we're in balance, breakouts fail and breakdowns fail, even on small scale, right? We 1 or 2 tick the low, push back to the other end of the range. We 1 or 2 tick the high, push back down into the range, and then the middle becomes the absolute crummiest place to trade. This was the worst place between 1821 3/4 and 1816, were the absolute worst places you could place a trade on Friday, particularly below 1820 and 1816, more specifically. Worst places you could place trades. Best places were on the edges, right? And these edges were accompanied, by the way, with tick divergences all the way through on 1 minute and 5 minutes. So you might want to look for that. It wouldn't be unusual to have 2 days of balance after the day we had. I simply would suspect that we're going to get that failure up here instead of right here. I think people are probably too early on being eager to short, given how easy the downside's been. And remember, this hallmark of this market has been people jumping in on the short side too quickly and too aggressively and getting squeezed out. So hopefully we get some room up here or up into here to take some shorts to the downside. And then if not, obviously it'd be nice to get a test of Friday's low or Globex low. I'd be surprised if we had that wider range today, but let's see where it goes. There's not overwhelming weakness out of the gate on NQ, by the way. We've kind of pulled down and stopped. So don't forget to adjust your NQ charts for Globex high. And I hope that helped, guys. I'm going to kind of go grab a cup of coffee and get reset here, and I'll look at the market in a couple minutes and see if there's not a couple of trades where I can make some money. Hope everyone has a great day, and thank you all for joining me this morning.